back to Markets at Noon. And amidst this volatile market, how should you position yourself? Let's understand from the expert. And for today, we are being joined by Mr. Dikshit Mittal, who is the Senior Fund Manager of Equities at LIC Mutual Fund. Hi, good afternoon, Mr. Mittal. Good to be speaking with you. The markets have definitely turned volatile, but Indian markets have been showing a bit of a resilience in the past couple of weeks. Give us some sense that do you believe that the near-term bottom is already on place, and selectively, if you are looking out for some opportunities, then which are the pockets?
Yeah, sure. So on the market front, we have seen sharp price-wise as well as time-wise correction. So last 6 months, large cap index is down close to 15%, and mid and small are down by 20 to 25%. So to that extent, I think large part of the correction at this point in time seems behind us. And also looking at the kind of earning visibility we have, though we have seen some kind of EPS cuts in the near term, but beyond a point, I think most of the large sectors have decent earning visibility going into fiscal 26. So combining earning visibility as well as the time and price correction that we have seen across market caps, I think we seem to be closer to bottom. Though near term it's difficult to say anything, but I think if we are taking more than 1 year view, I think market should be giving decent kind of returns. In terms of sectors, so the sectors which are having decent revenue visibility at the same time growing at more than the nominal GDP growth. So some of the sectors which fall into this category, one is power capex, especially on the T&D side, transmission and distribution. I think even in third quarter, these companies have delivered very, very good results. So I think that is a theme to look out for. And secondly, our long-term structural theme, which is consumer discretionary. I think that is, we expect that to come back strongly going into fiscal 26, especially looking at the kind of tax breaks that government has given in the last budget. And at the same time, some of the export-oriented sectors, or you can say manufacturing-related sectors, which are gaining export market share as well as replacing some kind of imports. I think these 3-4 sectors we are positioned accordingly.
All right, so that's about the sectors. A very good morning or rather good afternoon to you, Dikshit. And I want to ask you particularly about IT index and the IT sector. Because when you had the Trump administration take over the last 1-2 months, you had a narrative which meant that things would only look better for the IT sector and the IT index as a whole, or Indian IT companies, pretty good given the fact that you have the US economy that's in the strong footing. Now, come 3 months down the line into the calendar year, and you are listening or you're hearing murmurs that the US economy may go into some sort of a trouble patch, and that sort of a commentary is not having or not boding well for the IT index. Now, how should one actually play this theme? Because those who must have played the theme hoping the fact that things are going to get better, earnings are going to get better, the visibility is there in the economy. Now, all of that narrative is taking a shift.
Yeah. So basically, IT stocks prior to this recent fall, they were rising purely on the hopes that fiscal 26 will be better than fiscal 25. So to that extent, we saw some kind of P re-rating across the sector. But at this point in time, looking at the things which have transpired globally, in the fact that US now market is factoring in some kind of slowdown in the growth, and at the same time, looking at the tariff war which is now playing out. So that tells us that inflation in US at least is expected to remain sticky. So that means that globally interest rates may remain higher for longer. I think that is putting the pressure on these IT stocks, because these stocks, the clients, if they are basically entering the slowdown at the same time, interest rate reduction, whatever expectation that we have, that are now getting tapered. So to that extent, I think market is now resetting their EPS growth expectations for FY26. So I think whatever re-rating we saw in last 6 months or last 12 months, I think now that is getting corrected. So overall, I think in the near term, growth challenges remain in the sector. And I think all eyes are on the next year's whatever guidance these companies give. But we believe that initially they may give some kind of muted guidance to start the year with, looking at all the uncertainty. I think that is leading to this, I think, correction in the IT index.
All right, that's about IT, but Mr. Mittal also talked to us about the cap goods space, because in this recent fall, what a correction we have seen in some of these companies. And well, of course, there was a debate going on, the higher valuations, the kind of multiples these companies were holding. But after that reset, do you believe that's once again to look at some of these names selectively, and what could be the triggers for the same?
Yeah, on capital goods, we remain constructive. But one has to pick and choose the sub-segments in the capital goods. As I mentioned earlier, we are bullish and we are seeing large investments coming into the power sector, both on generation as well as transmission and distribution. I think the companies who are present into this value chain are expected to do well in terms of earnings growth, at least for the next 2 to 3 years. At the same time, companies who are basically making some kind of export market share gains or import replacement kind of companies, I think those companies should do well. But the kind of rally we saw last year, like all the capital goods stocks were doing well, whether it defense, railways, or across the board, I think that may be thing of the past. One has to be selective in the space. So subsectors which are growing, I think those stocks and those sectors will come back. Maybe in fiscal 26.
Right. Dikshit, let me ask you about the banking space then. You've not spoken much about the banking space, and this one seems to be like a clear winner when you talk about the consensus call coming in from a lot of our experts who are of the view that banking sector is the one that you should head towards right now, given the fact that the valuations are reasonable, you have big banks that you're getting at a good price. What's your take? Are you in the fence that yes, it is the banks that will lead the rally going ahead and therefore you should position yourself? Because if you look at fundamentally, the deposit growth has still not come back.
Right. So on the banking sector, I think valuations are giving much more comfort. Like valuations of leading private sector banks are closer or lower than the long-term averages. At the same time, credit growth in the system is still reasonable in low double-digit kind of growth. But one has to be very choosy in the space, in the sense that now a sector is coming through very, very low credit cost for the last 2 years. So I think now credit cost will start rising. So the banks having better underwriting history and banks which are having a kind of book which is more or less tilted towards more secured kind of lending, I think those kind of banks can do well next year. So overall, we are constructive, but one has to remain very selective in terms of private financiers where the banks are having good NIM as well as the credit growth, credit cost should remain in check going into next year.
All right, with this, Mr. Mittal, we'll let you go, and that really appreciate you taking the time out and speaking with us.
If you like this video, then like, share and subscribe to ET Now.